when you go to close on this loan, they must disclose to you how much interest, if you keep their money, how much rent you're going to pay on that interest, you're going to pay on that money if you keep it for the entire term. It's going to be $287,477.60. Folks, is this number 4% of $400,000? Absolutely not. It is 71.869% of that number. So your 4% loan turns into 71% paid back. So the interest rate you're quoted is not the interest rate you end up paying. Okay? So this is what we're talking about, folks. So listen, if we want to learn how to beat this thing, all right, we'll learn how to beat this thing. I'm going to go over and show you why lowering the interest rate will put you in at a disadvantage on this loan. So I got 4%. Okay. And now they said, well, Don, I can get like 2.8, 2.9. All right. Let me show you what happens here. All right. So we're taking a look at this payment. And out of that very first payment, all right, the payment is $1,909.66. This is how it breaks down. $576.33 goes to principal. Look how much goes to interest. $1,333.33. Wow. That's a lot of money. We also have learned that if this is the very first payment here in January, then February's principal payment would be on line 2, $578.25. So here's my question. If I'm in January and I made my payment on time, do I have to wait till February to give the bank an additional $578.25? Do I have to? The answer is no. If I had it, I could give it to the bank in January. If I did give this to the bank in January, I'm paid down to line 2 in January, where I'm paid down to $398,845.42. Okay? If I pay down to there in line 2, guess what? My next mortgage payment for February is actually on line 3 of the schedule. What just happened? Even though my payment is over $1,900, I got rid of one line off my amortization schedule for only $578. And the interest on line 2, the $1,331.41, I never have to pay. I just eliminated over $1,330 worth of interest I never have to pay just by giving the bank that $578.25 early. Now watch this. That's at 4%. I'm going to put the same loan in at 2.9. Okay, putting the same loan in at 2.9 for 360 months. Well, look here, I get a lower payment, and the interest cost over 30 years is $139,000, not $287,000. All right. So I get a lower payment at the lower interest rate, and I get a lower overall interest cost over 30 years. That's over 30 years. Now, remember that we're comparing two 30-year loans. But watch what happens when we take a look at the principal payment when you lower the interest rate. Okay.
I'm sorry, Don, you did 260 instead of 360.
Oh, I did. Oh,
term.
shoot. Thank you. Thank you. All right. All right. Boop, boop, boop. Thank you, sir. I appreciate that. You know, it's so good to have people out there watching to see what we're doing. Here's the new payment. Okay. $1,664.92 instead of 1333. Okay. So we have 4%. And we got 2.9%. Watch what happens with the 2.9%. I make my very first payment, and on line 2, my principal payment is what? $699. It's almost $700 is my principal payment now. So what did we just find out? At the higher interest rate, I only have to come up with $578 to knock out one line. With the lower interest rate, I have to come up with nearly $700. Watch this. Let's take a look at 1 year. About $7,000 at the higher interest rate, about $7,000 applied to principal knocks out 1 year worth of payments I never have to make. And my next mortgage payment for the next month is actually on line 13 of the schedule. So if I were to give this $7,000 all at one time in January, my new February payment would be on line 13. All right. But at the lower interest rate, $7,000 only takes off 10 months. Folks, can you now see that lowering the interest rate actually makes it harder to pay the loan off early? Boy, oh boy, oh boy, oh boy. We don't know what we don't know. We just automatically assume that by lowering the interest rate, we put ourselves in a better financial position. It may not be the case. Look at everything that has to do with these loans and then focus on one thing and one thing only. How much is it going to cost me to manage this loan with the choice I make? And make sure you're paying the least amount of interest that's mathematically possible to purchase or acquire that property. And then if you do that, you can take the savings and invest that too.
But Don has some valuable information that can contribute to the quality of a person's life. And it only costs you a few dollars. It's his book. Why not get that?
I'm going to go through the P.I.L.L method myself with some of my investment properties. So I'm going to link up with Don, and then I'm going to sit down with him, show him my investment portfolio, and see how I can eliminate interest.